the light on the job market is definitely dimming. I don't think that's a particularly controversial thing to say. It started actually even before the NFP with the ongoing decline in job openings. That's important because I think the relationship between job vacancies and unemployment is one that's important to keep an eye on. This is the so-called
The
Beveridge curve relationship, right? And so, basically, shifts along the curve are considered like cyclical changes, and shifts out in the curve are more structural, right? I mean, that's kind of a simplistic way of thinking about it. But and remember, very early on in the recovery, Governor Waller famously said, well, because job openings were so elevated, we could probably cut a lot of those openings without having much effect on unemployment. And he was right about that. That is 100%.
Yeah, I think he said until like 4.75% or something.
Yeah.
We wouldn't see an uptick in the unemployment rate. And obviously we hit that point.
And unemployment's now been going up. And the thing is that you're now operating on a point along the Beveridge curve where any further erosion in excess labor demand, as proxied by job vacancies, will probably mean higher rates of unemployment. So you think about, job openings were declining in March. What do we think happened in April? Probably, we know from data from Indeed, which is weekly, that job openings continue to come down. So I think there is a risk that unemployment keeps going up. So that's the first thing. Before the NFP, that's kind of first principles. Now, looking at the payroll day itself, like both household and establishment, there are concerns. I get people are kind of fixated on like, okay, it came in at 177, that's great. But let's be real here. The numbers were revised down. Those tend to be sort of auto-correlated. So if you have negative revisions one month, they'll probably bleed into negative revisions the month after. So even though we got 177 on April, I will bet, a fairly significant sum of money to anyone willing to take you the bet that April probably gets revised down. Okay, when that number comes out. It's been revised down 8 of the last 10 years. And if you look at the initial survey, how many were collected? It was about half. So that just tells you that there are going to be revisions. It doesn't tell you the direction, but it tells you that there will be revisions. And then looking at the household survey, slack keeps growing. If you look at the number of permanent job losers as a share of the labor force, that's going up. If you look at sort of medium-term unemployment, that keeps going up. So that's going to bleed into the duration of joblessness, which I think is a problem because those people are harder to reemploy the longer you're out of work. And then the last thing I'd say, just to put a pin on it, is the cyclical areas of the labor market don't look great. You look at construction employment, residential construction employment, that's coming down. The fact that energy prices have come down quite substantially. What do you think that means for oil and gas extraction jobs? It's probably not good. Just a reminder that the president doesn't really care why oil is going down. He just cares that it's going down. So if it's like OPEC plus coming to some kind of supply situation to bring oil down, he's totally content with it, even if it means kind of sacrificing your oil workers on the vine here. And then the manufacturing sector, you look at what's going on in ISM employment, a lot of these sort of indicators looking at factory jobs doesn't look very promising. So, goods producing employment is likely to keep slowing. And that to me is important because that's sort of a cyclical proxy. I think if you're just focusing on the headline establishment number, you might think things are okay, but that's, I think, giving you sort of a false sense of security around the job market. And of course, keep in mind that the presence of like solid jobs data, payroll jobs data, that hasn't stopped the unemployment rate from kind of moving up. And I would suspect that continues.
I find it especially interesting, too, that within that unemployment rate data, the biggest increase it looked like was for job losers, not on temporary layoffs. So that's, a bit of a red flag if that's the one that's starting to increase in velocity higher.
Well, you'd also assume that the tariffs probably will increase the number of people on temporary layoff when the data comes out next month. And the risk, of course, is, this is the biggest debate right now, I think, is whether you think tariffs are kind of like a means to an end or the end in and of themselves. And to the extent that you think, as I do, that tariffs are in fact the point, then a lot of those temporary job losers from tariffs might ultimately become permanent.